Interesting news. There's actually been an ETF that has been released where Bitcoin is now trading on the New York Stock Exchange. Hi, my name is Pascal Manget and you're watching the Financial Ownership Podcast. So something recently happened in the past few weeks where an ETF version of Bitcoin got released to the New York Stock Exchange and now it's publicly traded by a company known as ProShares. And for those of you that don't know what an ETF is, an ETF stands for Exchange Traded Fund. And basically the way it works is, to give you an example how it typically works in the stock market, if you get an ETF on Exchange Traded Fund in the stock market, it basically is a diversified portfolio of stocks that you would get. So some common examples that people will use for like kind of index fund like ETFs, they would use things like VOO, SPY, VTI. VTI has over thousands of different companies that it's invested in, large cap companies that give you exposure to the total overall economy. And the great thing about ETFs is it gives you exposure to the broad US market without any high fees or anything of that sort. So a lot of times ETFs can be better alternatives than expensive mutual funds. And I've talked about that a little bit in my channel. If you're interested in learning more about that, I'll leave some videos of things you could watch to learn more about that. But this video is going to be more focused on the Bitcoin ETF. But one thing to really keep in mind is this ETF doesn't actually own shares of Bitcoin. So what do they have to get exposure to the upside of Bitcoin? They have something known as futures contracts. So the way a future works, it works similar to a call option, but it's slightly different. And for those of you that don't know how a call option works, basically it's a right to buy a certain amount of shares after a certain period of time passes. And for the futures contract, what they have for this is a rolling 1 month period where the futures contract is exercised and they buy the Bitcoin at that price. So they don't actually have the shares, they have the obligation to buy the shares at a future price. And that's what kind of makes a future contract different than a call contract, because in a call option, you have the option to buy a certain amount of shares at a certain price, but with a futures contract, you have the obligation to buy it at a certain price. So let me give you an example. Let's say you are buying a stock, right? And I'll give the example of a call in this example. If you have a call option that gives you the right to buy a certain share at $10 in the future, say in the next month or so, that means basically you can buy that call, you could use that call option whether it goes up or down and decide if you want to use it. So if the shares go to $5, the chances are you're not going to want to exercise a call option on something that has went down in price. And if you have a contract that gives you the right to buy a share at $10 and the stock dropped to $5, you're not going to exercise that option. But in the other side, if the stock goes up to $20, you might want to exercise that option if you have the right to buy that stock at 10, because you could buy it at 10 with the call option that you got and then end up selling it at the market for 20. But a futures contract doesn't give you that obligation, it doesn't give you that right to decide whether you want to buy. So you kind of have to buy that price, you're locked into buying that price. So in that same example, if you have a futures contract for that same share and you have that futures contract for $10, whether it goes down or up, you have to buy it at the time period that the future has to be exercised. So like I told you, for the Bitcoin ETF, it's a rolling 1 month period. So for the example that I'm talking about now, if you have a stock that you got a futures contract on, that means whether the stock goes up or down, so if the stock goes to $5, you still have to buy those shares at 10 at the later price, because that's how the futures contract works. So it's a little bit less beneficial than a call contract, and especially with the fluctuations of Bitcoin and things of that sort, you could potentially buy it at a higher price than what it is in the market currently. So one thing to keep in mind, when you buy this ETF, it doesn't exactly mirror Bitcoin because it's buying futures of Bitcoin. And another thing to keep in mind is the expense ratio of the Bitcoin ETF is relatively high. It's 95 basis points or 0.95% expense ratio. And if you listen to any of my videos in the past where I talked about expense ratios and how it affects your money, honestly, if you're looking at expense ratios for mutual funds or any type of market-related fund, Usually anything over 50 basis points is on the expensive side. So similar to this Bitcoin ETF, because of all the tough things that they have to do to manage it and all those type of things, that probably leads to the higher expense ratios that you would see with something like a Bitcoin ETF. But at the same time, it is a little bit more expensive because you have to do things like manage Bitcoin, and there's different types of tax risk and all these things that are associated with it that make it harder to manage. Or they do have those expense ratio costs. They're potentially going to have a lot of transaction costs too as well, because in order to abide by the rules that of a regulated fund that now, since it's trading on the stock exchange, this ETF is trading on the stock exchange, at the same time they have to abide by certain rules. So that might increase the tax liabilities of the company that's using of ProShares that's buying these ETF futures. So that could be basically given to you in terms of cost as the consumer. So that's one thing to pay attention to. There is some tax risk associated with it, but you do get the ETF fund of it. So as long as you don't sell, you have the unrealized capital gains ability to just hold it and not get taxed on it. But at the same time, if they're paying ridiculous fees and transaction costs and taxes, it's gonna translate to the people that own shares of that ETF. So just because you're not paying taxes or you don't see the money coming out of your account in taxes doesn't mean they won't bring you that transaction fee or the fees that they've accumulated through the ETF due to the amount of tax liabilities that they have. So that's another risk to pay attention to. The transaction costs are kind of variable. You don't know exactly what the transaction costs are going to be, because who knows what the ETF company transactions are going to occur in terms of tax liability and debt and things of that sort. So it's one thing to keep in mind. It seems like a very expensive fund, and even with that 0.95% expense ratio, you might end up paying even more because of the potential tax liabilities that exist within that fund. The ticker of it is BITO, and the benefit is it's trading on a lot of different stock brokerages. I'm pretty sure companies like Robinhood have it, and some other brokerage accounts have it. And if you even wanted to get it in a Roth account or a traditional IRA account, you would be able to do that because it's in the ETF version, so you could qualify for some more potential tax benefits. So that's one of the good things about having cryptocurrency in that ETF version, and it gives you a little bit more flexibility in the accounts that you could use or the accounts that you could invest in using that ETF. And another benefit is it doesn't give you all the hassle of trying to deal with all the trouble that comes with owning Bitcoin. You don't need a Coinbase account, or you don't need any other of these other types of accounts, and you don't have to worry about any of the other tax rules or anything like that, because it's in the ETF version and a company is basically going to be taking care of all of that for you. So that's the benefit of it. And also, if you want a more regulated fund, these ETFs, even the Bitcoin ETF, BITO, is regulated. So that could be both a pro and a con in a sense. So depending if you want some rules within owning your Bitcoin or anything like that, it can have a benefit, but at the same time it can restrict certain things with your account that you might necessarily, or you might not want, or might not be better for the overall performance of the fund. But only the future will tell. This fund has only been out for 2 weeks, and it has a lot of trading volume. A lot of people are buying this fund, and it has, in the first few days, it had over $1 billion in trading volume. And even when I look at it now, the trading volume of the ETF is still in the millions. So if you want to ever get out of it, selling it in the market doesn't seem like it'd be a problem, because it seems like there's always going to be a buyer and a seller because the volume is very high, at least as of right now from what I see. If you want to find more information on the fund, I urge everyone, whoever wants to invest into that type of ETF, to look at the prospectus of it. So the prospectus basically gives you a detailed information based on what you're investing in, how the fund works, and the fund objective, the cost of it, and all these things that you should know as an investor. So anyone that's investing into the Bitcoin ETF, I think it's a good idea to look at the prospectus. It's only about like 8 pages. It's not very long. and they'll give you a good overview on what is in or what they're doing with your money in that Bitcoin company that you're buying shares from. And to give you a little bit of my thoughts, as you all probably know, Bitcoin is a highly volatile fund. The price of it fluctuates daily a lot. So I would look at this similar to the way I would look at, say, a small cap or a micro cap company that you're investing in. You wouldn't want to have a majority of your portfolio by any means into something like a Bitcoin ETF or cryptocurrency. Maybe there's a good place to have a portion of your portfolio in it, and if you believe in the long-term growth of something like Bitcoin, holding it for the long term, the volatility of it won't matter as much, because if the price of it eventually goes a lot higher in the future, as long as you have the long-term vision of holding that Bitcoin for a decent period of time, you could wait out those fluctuations. And I could see it making sense being a portion of your investment portfolio, obviously not majority, maybe something like 5 or 2%. I'm not encouraging anyone to invest in it by any means. I mean, I'm personally not investing in it, but I can see a place for it in the market. It's just because it's highly volatile doesn't mean it's not a good idea to invest in. So volatility could be both a good and a bad thing. So all that really means is the price fluctuates a lot. It could fluctuate a lot in the north direction. So depending on how the investments turn out in the future, you could potentially make a lot of money with Bitcoin. And I'm sure many people that even listening to this video, you've heard of a lot of people making money through Bitcoin. So it's never a good idea to rule out any asset class overall. It has its place in the market, but this fund does have high expense ratio, so that's one thing you want to be aware of. And if you're sensitive to that and you don't really like that, maybe just owning the regular Bitcoin for you might be a better alternative. It only has been out for a few weeks. It's pretty interesting, so let's see how it's going to be doing in the future and what type of things they're going to change and all the things that might happen with that. So if you found some value in this video, go ahead, like, comment, subscribe. I post financial content like this every week, so if you're interested in learning about things about personal finance, how to invest in the stock market, how to use different financial vehicles to your benefit, I highly recommend that you subscribe to this channel, and I'm sure you get a lot of valuable information. Thank you.